This is 20 Minutes Live. Welcome to all of you from India and around the world. I am Ninad Karpe, partner at 100x.vc. Today on 20 Minutes Live, we have Anuj Puri. Anuj is the chairman and founder of ANAROCK. He has more than 30 years experience in Indian and global real estate markets and is widely acknowledged as a leader in that space. Until February 2017, Anuj was chairman and country head of International Property Consultants JLL India, and he was overseeing a team of over 9,000 people in 11 cities. Anuj set up ANAROCK in 2017, and it is now the largest residential agency in India. Anuj has received significant national and global recognition for his contribution to real estate, and his views on real estate are sought out by policymakers and people from industry. Welcome to the show, Anuj. Our format is simple, unique, and crisp. Anuj will speak for 10 minutes, and after that, we'll have a round of Q&A for 10 minutes. If you want to ask him anything, please post your question in the window on your screen. Over to you, Anuj, for 10 minutes of comments and remarks.
Hi, Ninad. Very delighted to be here this afternoon. Thank you very much for having me here, and thanks for your kind words. Clearly the real estate market has gone through a huge amount of change since the COVID has hit the Indian shores. I think is that more than wealth destruction, there has been productivity loss. Clearly, all the segments of real estate have got impacted, whether it is the commercial, the retail, the residential, hospitality, or the industrial. Some of them positive, some of them negative. Clearly, on the office side, we believe it has been negatively impacted. We had thought at the beginning of this year that there was going to be 42 million square feet of leasing activity that was going to take place ahead of last year, which was 40 million square feet. And we thought it will be 42 million square feet, but today we think it's going to be around 28 million square feet, largely because a lot of the US corporates are not going to take that much more space as what we had anticipated, given the impact in the US economy. And on that, if you were to put in work from home, there could be a further impact. So reasonably, we think it's about 28 million square feet of new leasing activity, down from 42 million square feet. On the retail, which has been really badly hit at this point in time, we think is that the activity is going to come down to about 50%. At the beginning of the year, we thought there was going to be about 9 million square feet of new retail leasing that is going to take place. We think it's going to be no more than 4.5 million square feet. Retail malls were the first one to close. They're perhaps going to be the last one to open. Even when they open, you're not going to find the multiplex, the food court, the restaurants in many of these malls opening up. We also think is that there is going to be casualty in the retailers, where a lot of the players may not be able to come back, given the exposure of debt that many of them have, and given the supply chain may have got disrupted. So clearly retail, we think, is perhaps the worst hit, along with the hospitality. Residential, we thought had been really badly hit, but it is interesting. There are mixed views on residential. Clearly, when we did the survey and we contacted 20,000 potential home buyers to really understand what their thought process was, on one side of the equation, it was, how dare you even ask us that whether we're going to buy a residential at this moment in time. It's about life and death. I don't know whether I have my job. I don't know what's the pay cut going to be. And on the other hand, we got hugely positive response. Number of the potential buyers said is, now that I have lived in my house for 6 or 7 weeks, I've seen how many cracks there are. I need bigger space. My parents have been pushing me to buy, and I've been resisting. I have invested in the stock market. I've invested in mutual funds. It's really taken me back to 2015, 16. In many cities, in the survey it came is that the building society is differentiated between the tenant and the apartment owner. There were different rules for the apartment owner versus different rules for the tenant. Equally, when you were to look at the home loan rates, it has become extremely attractive at 7.5%, which we think was 14 years low. In 2006, we had these kind of home loan rates, and now they are prevalent. But clearly, many of these home buyers are saying is we're going to wait for the lockdown to open up. We're going to visit the site. We'll see whether the construction has commenced at the site. I think it is largely going to gravitate towards good developers, towards developers who in the past have delivered on quality and have a reputation where you're going to largely find the home buyers gravitating towards. It is interesting when we get in the comparison from China. China used to sell 5,000 apartments a day before COVID. During COVID, it became zero. And in March 2020, after they had come out of COVID, they have come back to 3,000 apartments a day in the top 30 cities. This is data given by Capital Economics. So it is quite encouraging to see that there perhaps may be need for residential home buying, although we will see once the lockdown fully opens up, whether there are any job losses and to what extent are those job losses and which category the job losses are. Are they largely going to be in the informal and the blue-collared worker? That means a lot of the affordable housing may get impacted. But given the fiscal and financial stimulus that the government is pushing through, perhaps many of those jobs may not get lost, and there may not be a widespread job loss across the informal and the formal sector. What has done exceptionally well, and it has taken us again by a big surprise, is the industrial. I mean, there is a huge amount of inquiries. Floodgates have opened up. These are largely the US corporates who are not now looking to have their second, third, fourth plant in China. They are coming into India and saying is that as a exploration base, we want to see whether India can provide us with the similar quality of service and similar quality of infrastructure and the permissions from the government as we've had in China. And we want at this moment in time not to put up our second, third, fourth plant in China. We want that to come into India or Vietnam, Indonesia. These are the places that they are exploring. Clearly, there is a news article that has come out that 200 US companies at this moment in time are exploring to come into India to outsource their manufacturing, which ideally they would have otherwise gone into China. Big opportunity on the industrial. On the warehousing, we have anyway seen during the COVID period has done exceptionally well because e-commerce companies have continued with with a lot of their F&B framework, and also many of the retailers in markets other than Gujarat and Maharashtra have continued to service through the e-commerce, and warehousing continues to do pretty well. So in a summary, the office sector, we think the demand is going to get hit because of inability of US corporates to expand, and the work from home, which has been widely publicized by a number of corporates. One of the largest corporates in India has gone on record to say is that by 2025, only 25% of their workforce is going to operate from the office. So there is clearly an impact on the demand there. On the retail, as I said, it has perhaps got impacted the worst. On the residential, mixed feelings that we are really getting from the home buyer. Perhaps we will know clearly over the next 4 to 6 weeks after the lockdown opens up, whether the home buyer still continues to remain as aggressive as what we've seen in China. Come back. And lastly, on the industrial side, we have seen a fair amount of confidence coming in from the manufacturing corporates, organizations from the US to say is we want to explore India as an alternative to China. So, pretty interesting, pretty encouraging at this moment in time where we are. I just want to very quickly cover on the private equity. I think private equity at this moment in time is sitting on the fence to look at what the valuations are going to come out in India. They have a pool of capital where it is fungible. They are seeing in their home countries, if the assets are going to become cheaper, then they may largely invest there. If they find that the yields become more attractive in India, then we're going to find more capital coming towards the office and the industrial sector in India. Otherwise, at this moment in time, it does look that it is evenly poised, whether that FDI capital seeks to go into the home country back, which are more mature Western markets. And if assets have become cheaper there, then it is going to be easier for them to continue to invest in their home base rather than come to India. Lastly, Ninand, the government has done a fantastic job. There has been a fair amount of package that was announced yesterday by the Honorable Finance Minister. In that, on the real estate directly, there was one specific clause which allowed the real estate developers to consider under the Real Estate Regulation Act this event as a force majeure, and they get 6 months extension for completion of their development under the Central RERA Act, which means all the other states will now need to follow, and their timelines for delivery get extended by a period of 6 months. But real estate, as I have always said, really piggybacks on the economy. If the economy comes in, if the demand comes in, if the consumption comes in, if there is more money in the hands of the home buyer, you're definitely going to see more advantage towards the real estate.
Thank you, Anuj. That was nice, crisp. You were very. Yeah, thank you, Anuj. Can you hear me? Yeah, Anuj, thank you. I hope you can hear me now. So, Anuj, there are a lot of questions, and I'll get going with some of the questions. Uh,
I'm sorry, Ninand, I'm not able to hear you. We're best in our technology, but sometimes,
no, no problem.
at the opportune time, this happens.
Uh, can you check if mic button? Can you hear me now?
Yes, I can hear you. Perfect.
Okay,
Brilliant.
great,
Thank you.
great. Sorry about that, everyone. So we'll extend our session by 5 minutes since we lost that time. If you don't mind, Anuj, you'll extend by
Yes,
5 minutes.
absolutely.
I don't know what happened. So, let me thank you for those comments, and they're very nice, brief, crisp. The first set of questions is from Deepak Gupta and Mudit Jain. Both of them are asking what additional fiscal stimulus is required for real estate industry from the government.
I would say, Linand, 4 or 5 things at this moment in time that is required. Clearly the developers who own the retail malls and the office assets, they have taken the lease rental discounting from the banks. This is money upfront that they take from the bank and discount the lease, which is either a 5-year or a 9-year lease. Now, if the rent is not going to come through from the occupier, I mean, certainly in the malls, I dare say that you're going to be able to get in the rent from the retailer who's just not operating. How does the mall owner then service the banks? So clearly, there is going to be a moratorium that is going to be required on the LRD. That's the first one. On the residential side, there is going to be booster that is going to be required for making the home buyer interested to go out and buy the residential apartment. Tamil Nadu government has done a fantastic job where they have reduced the stamp duty and the registration yesterday by nearly 70% for a specific period of time. And I think that's what we are really looking at for various state governments to bring in that kind of a incentive where it is only a time bound and at a central level, perhaps two large initiatives. One, the GST to be brought down, and second is the interest that is paid on the home loan to be made 100% tax-free. And the ask of the industry is only till 31st March 2021. If you were to be able to do that, that will just ignite the cycle and make the home buyer interested again.
So there are lots of questions, Anuj. I'll try and kind of condense them. There are a couple of questions on prop tech. What is your view? Will this trigger higher investment in prop tech?
Clearly, Ninand, it has to be. It has to be done. This is going to become a contactless economy. You have been a big supporter of that. You have been a
Yeah.
big supporter of the tech and digital. And you would see majority of the corporates, all the listed guys, they have invested hugely in the last few weeks on digital. And we just feel is that that is the way to go. And I'll give you one of the example, Ninand, and the person who's asked the question will understand it. The large developer corporate said is, Anuj, it is not about lockdown getting over. It is not about whether the prospective buyer will come to the site or not. I, as a developer, do not want the prospective buyer to come to my site. What if the buyer is carrying the virus and he leaves the virus in my sales office? My full sales staff will have to be quarantined. My sale site will need to be quarantined. My construction will come to an end. So really, it is all going to be about prop tech. The way that they're going to be selling, the way that they're going to be constructing, a lot of it is going to be based on technology. Most of the developers that you meet up with, they're saying is one thing that we are going to really do now is speed up the construction as long as they have the finances to do that.
So we have a question from Mr. Junjunwala. What correction will we see in home buyer market in Mumbai?
So I have no doubt that there has to be a correction that will have to be done, and it will depend upon developer to developer. It will depend upon product to a product. Clearly, there are certain developers who are very stable, who have enough cash to be able to go through this, and unlikely that they're going to be able to bring down the price, or they would want to bring down the price. And on the other hand, there are going to be several developers who are going to be in a bit of an issue, who will need the money to be able to tide over through this period. My only request is that if there is going to be a steep discount in the pricing of the product, just be careful that, is that developer going to utilize your money to pay his lenders and not put it into steel and cement in there. On an average, since the question's been asked, I would say I feel is a correction of about 15%. You're going to see in a 15%.
So there are a couple of questions connected to co-working space. What do you see a future? Quick response.
I would say just four quick things. One is, they'll need to sanitize this better. Second is, I think it will be in vogue because a number of the corporates are speaking with us and saying is that we want dispersed offices. Because we don't want to be in one building in the event there was an eventuality that will happen in that building. But more importantly, we want offices close to our people's homes so that they don't need to travel 1.5 hours in here. Third is that the density in these places will need to go down. So one will really need to look at the business model, because otherwise the density was very high in that is. And fourth is many of these are still not making money. So they will need to see is how the private equity will continue to support their business.
So there's a question from a friend Jay Kumar. He's saying stamp duty should be slashed to 0 for a short period of time. Do you think that's a good step?
Absolutely. I mean, Tamil Nadu government has done 70%. I would say is if you can do it till 31st of March 2021, 0, it'll just help the reigniting of the cycle from the home buyer. Clearly, I'm very much in favor and delighted that at least one state government has taken this step.
So there are a couple of questions on question of redevelopment projects. Will they slow down in Bombay particularly? What is your view?
Clearly, it will slow down, Ninand. The redevelopment and even the SRA, both of them, I think, will have to go through the redefinition. We heard comments of Mr. Tata also on the SRA. The way that these are designed, they are so close, so small. They have 3 or 4 lifts for thousands of people. Clearly, there is no social distancing norms that are happening in these SRAs or the redevelopment. So I think the government will, at some stage, need to look at these norms. Otherwise, the activity is going to be very slow in these clusters.
So there are questions regarding financial stress by builders, developers. Do you think it will lead to consolidation or some of them just folding up? Do you think
So,
they're open for consolidation and mergers and coming together?
So Ninand, it will be a part of both. It will not be that every developer, every project is going to be bailed out, because in many projects, the developer has taken more money out of the project than what the balance installment from the home buyer is due to complete the project. And in those projects, you're going to see nothing will happen. And in another projects, you will see is consolidation that will happen. Is what will not happen is consolidation between two developers. It will be consolidation of projects that are
Okay.
going to take place, but not at what we normally see at a corporate level, M&A of two corporates. But there will be, I won't say that the full market will get bailed out because of this. There will be many instances, many projects, certainly in the north part of India, where I think there will be a problem.
So Anuj, this is in vacation time is a big time for residential buying. What has been your experience? It has come to zero, or there's still interest in exploring?
So Ninande, it is very interesting. Is I mean, our Bangalore, Chennai, Hyderabad, Calcutta, Lucknow offices have opened up, and first weekend went in, which was this Saturday, Sunday. And I spoke with the Bangalore guy, and he said it's usually 80 site visits used to happen on all the sites that they were managing. And at this moment in time, 26 site visits had happened, and closures also happened. So clearly, it does see that there is some activity that is going on. I had thought is that it'll be zero, that nobody is going to come out. But there seems to be some activity that's going on. It may also be, Ninand, because many of the good developers are offering schemes for a limited period of time, and that is perhaps what is bringing the home buyer, the prospective home buyer, to do these deals.
So there's a question from Naresh Wadhwa. I'll read it out to you. Do you think people will invest surplus funds in luxury projects, residential projects, or commercial projects?
A tough one. I don't think it'll be investment in residential luxury. I mean, clearly, I don't think that is where it is going to be. I think, if anything, it'll be on smaller offices that people will invest, and these will be more suburban, smaller offices of 4,000 to 5,000 square feet, and that's where I feel investment will go rather than buying luxury residential.
So I'll take last one or two questions. Questions are still flowing. What is the future of REITs? Someone's asking.
So, it is interesting. I am going to be a little bit restricted on this, Ninand, because there's only one REIT in India, and I sit on the board of that REIT as an
Oh,
independent
okay.
director. So it'll be tough for me. So from my perspective, it is exciting, and it
Okay.
should continue to do that. But I did want to caveat it.
Okay, sure. So I will put up this question by Dhruti Vaidya. She's asking, will our regulatory framework allow repurposing of large commercial spaces like malls and theaters? Repurposing?
It will have to be done. I think it's a very fantastic question. Is that if theaters go out of vogue, then you will have to repurpose, and the governments will need to allow that to happen. But then this will largely start from the Western world. And then one will really need to see is how it goes through. I am still very hopeful that with India, Bollywood, it is one of the favorite pastime. Theaters will come back. Hopefully once we're able to find what the vaccine is, or just like what China has done, social distancing. They have made the theaters only with 33% vacancy occupancy, and that's how they're running their theaters.
So let me wind this down with last one or two questions. Do you think, like China, the demand kind of shot up? In the consumer space, they call it revenge buying, pent-up
Yes.
demand. So do you think revenge buying or pent-up demand will come up as once it opens up, or what is
So,
your view?
Ninand, when you peel the onion and see why China pent-up demand really came in, it was a lot of it was government sponsored. These corporates are being given Wednesday to the employees. The second half is free to go to the malls. So, they're shutting down Wednesday, half day, and making sure that people are going to the malls. There is consumption, there's activity. And that is where we are starting to see this, buying happening, is because it is the thrust is really coming in from the government. And I felt is that our honorable Prime Minister, said similar, things where he is saying is that, we're going to push in more demand, push in more consumption, push in more supply, push in more localization. So I do feel is that it can come back with a little bit support from the government.
So I can't let you go without asking you a personal question. Anuj, are you an accident? Are you an accidental property consultant, or was this a planned career move?
Uh, I have, it is certainly an accidental one, and just like yourself. And it was clearly accidental to have got into the property consulting space. But I've enjoyed it. I came in by accident, but I have thoroughly enjoyed, because it wasn't really just broking. It was about analyzing. It was about predicting. And when it started to dabble into this space, I had read is that all the assets of the world put on one side, mutual fund, stock, jewelry, gold, diamond, etc., and real estate put on one side. Real estate was still more valuable than all the other assets. So that sort of enamored me, and then I started to build my career in this part of the sector.
Great, and you've seen a lot of changes. Can you give, maybe one or two line advice to a young person wanting to enter this sector?
Sorry, Ninand, I'm not able to hear you again.
Can you hear me now? I think I'm done
Yes.
with, yeah. I'm saying any advice, words of advice for a young person wanting to enter this sector?
I think I'll say very quickly 4 or 5 things. I do want sort of young blood to come in. They're the ones who are going to bring digital. Ninand, and I've spoken about it. I think it is a requirement. It is one of the last industries globally, not only in India, globally, which has not adopted technology, which has not adopted digital. So anybody who can come in on and bring in digital and technology, and bring in corporate governance, ethics, work with good quality partners, make sure that you're following the RERA guidelines, regulations in there. It is a good format to come in, but it'll require new thinking, which I do believe is some of our youngsters would be able to bring.
Okay, thank you, Anuj. It requires new thinking. On that positive note, let me wind up by saying it was a wonderful session. In 25 minutes, you really summed up a lot of things. We're delighted, Anuj, that you could join us today on 20 Minutes Live. Thanks to all of you for joining us today. Remember, every Thursday, 5 p.m., 20 Minutes Live. Thank
Yeah.
you.
Thank you very much.